Hi everyone, let's go over my low time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin, starting with my low time frame bullish scenario where we have a finished 3-wave structure in an expanding flat, which is a 3-3 and then a 5-wave move to the downside, where a minimum requirement for wave C is to grab the low of wave A in the most common, at least, expanding flat. And also the target area for wave C, a little bit less common but still a target area nonetheless, is between the 1.38 and the 1.236, taken from the high to the low of A to the high of wave B. This then over here has to be the low of this structure, which also means if we go down once more, we hit the invalidation, and we're going to be looking for an impulsive structure to the upside, where currently price is then working on wave 1, and potentially reaching one of these target boxes can lead to a wave 2 and then eventually a wave 3 for continuation. What is important to see is that if price is going to reach one of these resistance areas, is it going to build bullish or bearish CVD divergences? That is of course yet to be known. If we look at the resistance areas, the first one is the white box over here between 30.5k and 30.7k, and the second one is between 31.1k and 31.3k. If we go to the low time frame bearish scenario, we're still expecting a move to the downside in an ABC as well, but this time it's a zigzag, meaning a 5-3 5-wave move to the downside, where currently price is then working on this wave B, which by itself is then a 3-wave structure to the upside. The resistance areas are the same as very important resistance areas for then the high of this potential wave B. And depending on the high of this wave B, we can then estimate a potential C towards the downside, where two important areas that I am looking for is the target area over here around 28.8k to 29.1k, and one below between 27.8k and 28.2k. This wave C has to be an impulsive structure as well, and then a 5-3 and then an impulsive C to the downside. If we go to the micro scenario, then I want to talk about this structure over here, because yesterday we were talking about why the probabilities for a move towards the upside were not that high, and I mentioned as long as price is below this target box over here, I expect a move to the downside. Well, we took the low over here. Of course, we had the structure with the bars pattern that moved down a lot further, but I also mentioned in the video yesterday that if price is going to move above this target box over here with volume, potentially a back test, and then a move to the upside, it could be very, very interesting for a potential long scenario as well. And in this scenario over here, I also mentioned retesting the target box would be ideal, as written in Discord. And what happened on the lower time frame is actually quite attractive. So over here you can see price, same target box, moved to the downside, wicked the double dough that price has formed, started to move towards the upside over here, back testing the target box over here, but also with bullish CVD divergences, as I will show you in a second. For now, a little bit of a move towards the upside. So it is important for me that price is holding this support area over here. At least that would be a best case scenario, for then a move towards the upside. So this is exactly the scenario as explained in yesterday's video, and that is why I don't tend to remove my target boxes if they get broken once, because they might be relevant at a later stage as well. If we then go to a scenario of KG, he goes into detail in how one could possibly count this. He says it's not too great, but hey, it is a nice scenario nonetheless, and I want to show you. So KG is in the community. He's in Discord. He's a great Elliott Wave counter as well. Love his counts. And one of the counts he shared is this one over here, where he is looking for an ABC in each of the structures, leading to a leading diagonal wave 1. So we then have a wave 1, 2, 3, 4, and eventually a wave 5 to the downside, where now price is then looking for a wave 2 and potentially a wave 3. You could do the same with this being a whole wave A to the downside, as A is also a 5-wave structure, a B and then a C. But on the micro, you might be able to count something like this with 3 waves in each of the wave structures, because it has been very, very complex to count this whole structure, specifically this area over here, or I should say this area over here has been very, very complex to count, and there's a very high chance therefore that there are many corrective structures in this scenario, because an impulsive structure, it's relatively easy to find, but a lot of overlap over here, and going in the micro and trying to count everything, yeah, it's very, very difficult to go into a lot of detail. However, I do have 2 micro counts. The first one is the one of KG over here, where we are then looking for this to be a ending or a leading diagonal, and then a wave A or 1, B or 2, and then continuation to the downside in this particular scenario, where we then have this as a wave 1. Now, important is that wave 3 is not allowed to be longer than wave 1. Well, that is clearly not the case. And wave 5 is not allowed to be longer than wave 3. And you can check that by doing a trend-based fibber extension from the high of 2 to the low of 3 to the high of wave 4 over here. Put it on the 1-to-1, and you will see that very close, but no cigar, wave 5 is shorter than the 1-to-1 of wave 3, which therefore would makes this scenario a potential valid scenario as well. Again, it is very difficult to count all of these structures in detail, but because of all the overlap, you can imagine there's 3 wave structures in there. And now we are then looking for a 3-wave structure to the upside in potentially an ABC or a WXY. That is yet to be seen, but we are looking for upside, where then the white target box is at least a minimum target, and the blue target box might be reached to the upside. If we go to an ABC scenario, which is a little bit more bearish, then we are looking for an impulsive structure to the upside, after which we get a return to the downside. So in the other scenario here, we're looking for a 3-wave structure, while in this ABC scenario, the end of this impulsive structure over here is then a 1, 2, 3, 4, 5. And then you have an A, B, and then a wave C to the upside, where the most common target area for wave C is between the 1 and the 1, or between the two 1.618s, which is between 30.5k and 30.8k, with the 2.618 being a more rare target for a wave C at 31.1k. It is very nicely positioned in the blue target box though, and these are very nice positioned inside the white target box. So that's another reason why these target areas are so important for price. Now, the most common target for a wave B is between the 1.236 and the 1.38, but you can see price over here actually missed out on hitting this most common target area, which therefore probably gives the probabilities to the other scenario, where this is the end and we are looking for a move to the upside as the first structure of a potential 3-wave structure. If we look at the CVD divergences, we yesterday had many bearish CVD divergences in this structure to the downside. We also had the bullish one, but the bullish CVD divergences, with each bounce that price made to the upside, price was met with bearish CVD divergences all the time for then a push to the downside. But after this push to the downside, price here started to create bullish CVD divergences, continues to the upside, reaches the target box over here for then more bullish CVD divergences in this nice bounce. So if we go to the 15-minute time frame, you can see higher low on price, lower low on blue and on yellow as well over here. So bullish CVD divergences. And if I go to the 5-minute and I zoom into what happened at the target box over here, you can see also here higher low on price, lower low on yellow, lower low on blue. Bullish CVD divergences here locally for then a bit of a push towards the downside. Now, the bullish CVD divergences have already played out, so these are now neutralized. We had a little bit of bearish CVD over here that also already played out. Lower high on price, higher high on blue and on yellow, but that also already played out. And now we can only wait and see what price is going to do more locally, and if it finds the strength to continue towards the upside. If we then look at the probabilities, then if I go to the low time frame scenario, then currently for me the higher probability is this one over here, looking for a 3-wave structure to the downside to still reach at least the 29k area. But of course we could go up first for this wave B. That's at least something that I would be looking for. So in an A, B, and then a wave C to the downside, where at least we're going to reach this white target box. That would be good. And on the micro, then I currently would prefer this scenario over here. At least a 3-wave scenario to the upside. So something like this I would be looking for at the moment, where I think the scenario of KG is actually very nice indeed, or whatever ended here, looking for a move to the upside, where if we hit the white target area, we're just going to wait and see what happens there, right? Because in this ABC, the white target area is a minimum target as well. So in the micro scenario, I would be looking for this area and then observe how price is going to react there. And if we build bullish CVD divergences, I would be looking for the target box higher. And that is basically the plan. So I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.